Hi, and welcome back to another podcast with Mr. Hagan. And on this podcast, we're going to continue building our personal income tax calculator. Remember, this is all just a planning program. You wouldn't want to actually use this personal income tax calculator to do your taxes and to submit your taxes to the IRS. But this will really help you plan. And it won't give you maybe an exact number of how much you owe in taxes, but it's going to give you a ballpark figure, and you can use that ballpark figure to make plans in your life and make financial plans in your life. So let's continue. What we've done so far on these couple videos is we created some inputs about your personal family situation, your family income, whether you're married, how much you save for retirement, number of children, etc. And then we said over here that we have our output, and that would be our taxable income, our initial taxes owed, subtract away any tax credits that we receive, and that gives us, this is the big number right here, our final taxes owed, and then another number that we're going to call the average tax rate. We'll see that here in a little bit. And then we also did some work on this down here where we said we were going to put down here, we were going to put all the tax brackets populated by the single brackets, the bottom and the top of the brackets if you're a single person. And then we just made some brackets up. We were just kind of playing with it right now. We'll put some real brackets in here later. And then we said over here, we're not actually going to use these numbers to do any calculations, really. These numbers are just kind of just doing work in the background. It's over here that we're actually going to do some work with these numbers. So what we have to do is we first have to decide whether we're married or whether we are single. So if we're married, or if we're not married, if we're single, then there's one person. Then we would come down, we'd put a 1 in right there, and then we come down here, and as we did on the previous video, it would just take all these numbers right here and multiply them by 1. That is to say, keep you single, keep you in the single tax brackets. Then we said, what if you're married? Well, then you come up here and you put in a 2. And if you put in a 2, now it's going to be married filing jointly, which means it's going to take everything, all the single brackets, and it's just going to double them. Okay, it's just going to double those numbers. And then it'll use those numbers to calculate your taxes owed, which we're not going to do on this video. We'll do that on a future video. Actually, I'm going to use it on this video, but I will show you how to do these calculations on a later video. All right, so then we come up here, and let's do our formulas for these outputs over here. So taxable income. This is going to be this one kind of should be straightforward, but it's not for one reason. So what's your taxable income? Well, your taxable income, well, here's the formula, but let's talk about what that formula means. That formula means that you're going to take your family income, which we're going to put here into cell B4. That's the amount of income that your family earned, minus your standard deduction. That's going to be B6. So right there it is. That's going to be minus B6. So if you get a deduction, that means you don't have to pay taxes on it. It doesn't get counted as part of your income for the purposes of filing your taxes. So you have your gross family income, which was B4, minus your standard deduction, minus any retirement savings that you do, because if you put money into a 401k or a 403b or a traditional IRA, then if you meet the right income requirements, then you could get a tax deduction on that. And we're going to say this: if that number is greater than 0, then, and that's what this comma means, it means if this is satisfied, if B4 minus B6 minus B7 is greater than 0, then the answer, the number that will go in this cell, will be B4 minus B6 minus B7. Okay? So if this is true, what's before the comma, if this is true, if it's greater than 0, then the number that we'll put in here, that we'll put into the cell, will be this. Comma. The comma here means if it's not true. Otherwise, we're just going to put in a 0. Okay, and that just means that if B4 minus B6 minus B7 is less than 0, okay, if it's not greater than 0, if it's less than 0, then your taxable income is just going to be 0. Okay, so let's put some numbers in here and let's see what that means. Okay, so let's say that we made $100,000. So that's going to be our family income. $100,000 of income for this family. Okay, now first it says your taxable income is $100,000. Well, where did it get that number? How did they come up with this number of a taxable income of $100,000? Well, it's taking that family income, right, and it's subtracting standard deduction and retirement savings. Well, we don't have any, so therefore the taxable income is going to be equal to the gross family income. Now, what if you have a standard deduction? What if a standard deduction is $12,000? Then we put $12,000 in here. And that means that now your taxable income is only $88,000. You only have to pay taxes on $88,000. So you made $100,000, but you only have to pay income taxes on $88,000 of those dollars. Okay. Now, what about if you do some retirement savings? What if you put $10,000 into a tax into a 401k or a traditional IRA or something that you can write off in your taxes, and that would get your taxable income down to $78,000. So that $78,000 is simply this minus this, $100,000 minus $12,000 minus $10,000, right? And that's what goes in this box, unless. See, B4 minus B6 minus B7 it's greater than 0. But what if your income was lower? Let's say that your income was $35,000, and you got a deduction of $12,000, and whoops, I put $350,000. Let's change that. Sorry. Let's say your income is $35,000. And you have a standard deduction of $12,000, and let's say that you put $25,000 into retirement accounts. Well, that means $35,000 minus $12,000 minus $25,000. That's going to be a negative number, and then that would put a negative number in here for taxable income. But it's not going to do that because we told the formula what? We said if B4 minus B6 minus B7 is greater than 0. Then, just subtract them and put the number in here. But if it's less than 0, if B4 minus B6 minus B7, if it's less than 0, then make the answer be 0. That's what this last comma 0 over here means. And so that's going to put 0 in as taxable income. Why? Because, at least as we're doing this, taxable income cannot be less than 0. Okay, your deductions cannot take your family income below 0. Let's just remember what a deduction is. So a deduction just gets subtracted from your gross income. Okay, you don't have to pay taxes on a deduction. Okay, but it can't take your taxable income into a negative number. It cannot be less than 0. So that's going to give you your taxable income. Now, your initial tax is owed. Your initial tax is owed. We're not gonna get into doing that right now. But here, let me just change this number back. Let's go back to $100,000 of income. Okay, that makes our minus this, gives me my taxable income. Okay, I put in here that I'm married, and the program calculated that my tax bill is now going to be $3,300. Where did it get that? Well, it got that from down here, from calculating your taxes owed in this column right here. But I haven't shown you how to do that yet. So you're just going to have to just trust me here right now. I will show you how to do this on a future video. All right. But just know that that's going on down here. And then it took that number, that answer, $3,300, and it put it right up here. This was your initial taxes owed, which I set equal to cell D39. That was the cell down at the bottom that calculated this. Okay, then your final taxes owed, you have to subtract away your tax credit. Well, what's your tax credit? Well, you got to put in the child tax credit. Let's just pick a number. Let's say the child tax credit is $500, and let's say that you have 3 children. So your child tax or the tax credit that you receive from that is going to be 500 times 3. That's going to be the number that populates this. So it's going to be a very simple equation. It's going to be B8 multiplied by B9, and that's going to get you the number that goes right in here, $1,500. Okay, and then your final taxes owed, the formula you're going to put in here is just going to be your taxes owed minus your tax credit, and that's going to give you your final tax bill. So it'll be $3,300 minus $1,500 gives you a final tax bill of $1,800. So you just got to do initial taxes owed minus your tax credit. And then finally, the last thing is your average tax rate. Your average tax rate just takes your taxes owed right here divided by your gross income. Okay, so it's just your taxes owed divided by your gross income. And then I set this cell, let me just show it. I just formatted this cell to be percentage. I just formatted that to be a percentage, hit OK, and then there it is. Okay, so all these output things are being calculated. I put in the inputs over here, and I get the outputs over here. All right, now, remember, the big thing that's happening here is this initial tax owed. This right here is being generated from all of this going on behind the background, right? So we still need to build this, which we will do on another podcast, but we're not gonna do that right now because I've already gone a little long. Okay, so in another podcast we'll come back and we'll look at how to build all of these brackets and to actually calculate your taxes owed. We'll talk about how to build that formula on another podcast. All right, this has been Mr. Hagan on another Econ podcast. Thanks for joining me, and we'll see you on the next podcast.